In case you're wondering why I don't have my sunglasses on today, it is because it is almost sunset. It is 7:30 p.m., actually a little after 7:30. Sunset here is at like 8:12. So I've been waiting all day to get out here and shoot this video for you guys. And since it's almost dark out, I don't need sunglasses. I think this is the latest video I've ever shot since I've started the channel. And one thing that's kind of interesting about coming out here at this time is it does feel a lot calmer than when I'm out here during the day. You know, you have a lot of the leaf blowers and, you know, way more traffic and stuff happening. And now that, you know, it's evening, a lot of people are probably inside having dinner right now. And just feels more calming to be out here. So thanks to it raining all day, I'm out here much later today. No sunglasses, a little bit different video for you. But one thing that's not going to be different today is we are going to hammer this student loan debt once again. And just so you know, guys, I'm not really picking on people that have student loan debt. It's just that this is such a big looming problem right now that's going to be hitting the US economy that it can't be ignored. Just like the banking crisis, I didn't really want to talk about that either, but it was important and it's something that's still happening that is, you know, relevant, that we need to discuss, okay? So student loan debt. There was a great story today talking about how people are in even more debt now because of the moratoriums on the student loan repayments, okay? That's one thing that I have been talking about here on the channel for a while now, that all these programs that are designed to like help people with the payments. Look at this duck. This thing just flew over here. This thing is huge. It just landed right there. What's up, dude? One thing that's been happening with all of the moratoriums on all the debt payments, whether you're talking mortgages or student loan payments, credit cards, doesn't really matter what it is. People get a pause in payments, right? So they don't pay for a set period of time. And then once the payments resume, there's a problem, okay? Because now they don't have the money. They actually accumulated more debt in the meantime because the interest was still accruing in many cases. And now what do? Well, that's the situation that a lot of people are facing right now. And this report comes from the National Bureau of Economic Research. And this shows that during the student loan moratorium on the payments, people borrowed more money on their credit cards and took out mortgages, and they even took out additional student loan debt during this time on top of the loan debt that they already had. So what does this teach us? It teaches us that when you pause payments or put moratoriums on things and make it seem like people don't have the bills, they're going to find other ways to spend the money, guys. We have talked about this a bunch of times, and every single time we see this ends up being true. It's just human behavior. And this is what this research found out. By the end of 2021, borrowers who had their loan payments paused, okay, they took out additional debt on average of about $1,800 in the form of a car loan or extra credit card debt or extra student loan debt. When they looked at the people that didn't pause their payments and kept paying, they did not take out additional debt. So what this boils down to is the fundamental difference between people who are responsible with their money and people who are not. I feel like in the future, if they ever decide to pause mortgages, student loan payments, anything like that ever again, there needs to be some sort of qualification for this, guys. Like, they can't just pause payments on people that are financially irresponsible, that never should have had their payments paused because they're going to go out and spend the money on something else, and they're going to be punished for this. It seemed like a good thing at the time, like, okay, we don't have to pay, but now you are going to have to pay starting in September, and now you're saddled with even more debt than you were before the pause even started. So here's my point with all of this. Similar to the FHA loan modifications, where they're going to try to get people into 40-year mortgages that can't afford the payments right now. Well, FHA mortgage borrowers typically have low mortgages, guys, low monthly payments, okay? If they can't afford it now and they lower their payments a couple $100, okay, they're going to find another way to spend that money. That's what this research is showing. Same thing with the student loan folks, you know, they didn't have the payment, so what did they do? They found another way to spend that money rather than save it towards the payment, right? That's what we're seeing here. And This is the issue. So all these things are designed to help people when they're in a financial hardship, but in reality end up doing more harm than good because, like I said, it saddles them with more debt and just causes more problems for them down the road because now they have a bigger bill to pay and eventually it's going to come due. It's not just me saying this, guys. In fact, this is a quote from this research paper. It says exactly this: perhaps paradoxically, temporary student debt relief leads to higher overall household debt levels and larger future debt burdens. And then it goes on to say, the results indicate that debt payment pauses can increase consumption in the short term, which is why we saw this boost in the economy, right? But that overall debt increases as borrowers use increased liquidity to service new debt. So just means that people will spend more if you give them a pause on their bills. And that's why we saw such a hot economy during this time. You know, people got a bunch of free money. You know, people stole PPP money. Those people are crooks too. Let's not forget about that. People remind me of that all the time in the comments, and it is true, guys. Lots of stolen PPP money. People got funds they never should have, and it was wrong. But this is not going to be good because it turns out that over 15% of the borrowers that have a student loan were behind on their student loan payments before the payments got paused. So what is this going to look like when there is no more pause? What is this going to look like when the payments resume in September and, you know, we didn't have this crisis basically and 15% of people were behind? I think you can easily double that number. And like we talked about the other day, some people have been preparing for this diligently, saving a lot of extra money, taking advantage of not having the extra interest accrued on the student loan debt, and are preparing to pay off a big chunk of it when the payments resume, which is extremely smart. I'm happy for those people. But people that thought that they were just going to go on vacation and that they would never have to pay this money back, they're about to get a big reality check. So the reason I keep bringing this up is because once these payments resume, I think you're going to see massive problems in the economy, and it's all coming together at just the perfect timing, guys. You have the student loan payments resuming right around the time when it's predicted that we're going to be officially in a recession, okay? Officially, right? This is also going to be coming at a time when the home selling season has ended and typically things start slowing down with that. And it's also going to be happening at the same time that we have some of these people with the massive office debt coming due that they're planning on defaulting on, that they're not going to pay. And all of this with the credit crunch. I mean, these are all big problems, and I think this is going to be very bad that all these things are going to be happening coincidentally right around the same time. I mean, you can avert one crisis or two, you know, simultaneously, but 5 or 6 at the same time, I don't think so. Now, one of my viewers, John, he sent me this article out of the UK talking about porting your mortgage. And this is something that I've never really heard of before. And he says that some people have been able to do it here in the US. I've never heard of this. This sounds like a very common thing that they do in the UK. And this is a good solution to people right now that are facing higher interest rates that want to buy a new property and sell the one they're in. Because what this mortgage porting is it's basically like transferring your existing mortgage to a new property is essentially what you're doing. And this can be a really smart idea. You know, say you have 4.5% rate over there, okay, and now you're facing 7% rates. Instead of getting a new house at a 7% rate, you could essentially take the 4.5% rate with you to a new house. They say you got to check with your lender. Some mortgages are portable, some are not. Like I said, I've never heard of this before. But one thing I would encourage you to do is, if this is something that you want to do, say you want to sell a house and maybe move to a new one, is just look into this and call your mortgage lender and see if they offer this. It doesn't hurt to call and ask and find out, because you never know, and you might get lucky, guys. That could be the answer to moving to a new house right now at a time when interest rates are just too expensive to pay for a new house. So look into that. Now the next thing is one of my other viewers, Steve, he's always sending me articles. So thanks, Steve, for sending me a bunch of stuff. And he sent me this one about these interest-only loans with the commercial real estate and the problem that that's going to be right now. And this commercial real estate fiasco is the problem that I'm referring to all the time when I'm talking about these office buildings and things like that that are going to be basically doing planned defaults, guys. The problem is you have all these office buildings that are now worth less than they were pre-pandemic, okay? Because of the whole work from home movement has gotten so big that people are not occupying these office spaces. The buildings now are worth less than they were before because they don't have occupancy like they had before. And this problem is so large that it's estimated that there's about $1.5 trillion in commercial mortgages that are coming due over the next 3 years right now. And the reason why they're looking at defaults is because many of these loans are interest-only loans. And these interest-only loans are so common today that in 2021, interest-only loans for these commercial buildings had increased to 88% of all of the mortgages on commercial real estate, and that is up from only 51% in 2013. So almost doubled, and almost all of these commercial buildings now have some sort of interest-only mortgage on them, which is going to be a big problem. And typically how they would pay this debt off is they'll sell the building or they'll get a new loan. But now banks don't want to refinance these properties because they're not worth money. Same reason that you can't refinance your house when the housing market goes down. This is where the credit crunch comes in, because you have many of the small banks that are holding these mortgages right now, and they're all reluctant to issue any new loans to these office buildings right now because they have obligations to their shareholders, guys. Remember, many of these banks are publicly traded companies, and their sole purpose in life is to earn a profit. That's what corporations are designed to do. So right now, they're pretty much not writing new loans for any of this commercial real estate right now. And like I was talking a few minutes ago about timing and coincidence, well, coincidentally, okay, 35% of this $1.5 trillion in mortgage debt is coming due between right now and the end of 2023. So like I said, all of these things coming together at the same time. Student loan repayments starting up again. You know, people have to pay their mortgages again. People have to pay their rent again. No more rent moratoriums. People have to pay office buildings needing to pay this $1.5 trillion, or even if it's 35% of that, what is that, guys? That's still $500 billion, right? And how this affects you and me is because these regional banks hold the lion's share of these commercial mortgages, they're gonna have to cut back on new lending as more of the owners of these office buildings straight up default. They're not going to pay. It's just like people during the last housing crash that had no equity and they got to live in the house for free for a couple of years until the foreclosure takes place, and then finally let it go to foreclosure. Okay? Not a bad deal. And that's exactly what many of the owners of these office buildings are planning on doing right now. In fact, this was a big story that we saw just a couple days ago out of San Francisco. You know, the biggest hotels in downtown San Francisco, guys. You have the San Francisco Hilton in Union Square, as well as the 55 Park Hotel right downtown San Francisco, and they're surrendering their loans, basically giving the property back to the bank. They're just saying, yeah, you can take it, we can't pay for it, and yeah, it's all yours now. That's basically the same thing as what we called jingle mail back in the day. You would just send the keys back to the bank. I can't pay, here you go. And this could be done before an actual foreclosure takes place, which would save everybody a lot of time. So I'm sure the bank would rather get that jingle mail rather than have to go through the foreclosure process here. And just this one property alone, to give you the scale of what we're talking about here, they're talking about defaulting on a $725 million loan, okay? So we're talking almost $1 billion just on one property. So you can see how all of this adds up pretty quickly.
Literally, like, watched 4 of your videos today.
Really?
Literally watched 4 of your videos today. To see you walking past our house right now, he's totally cool.
Oh, that's awesome. Well, that was cool. I always love meeting subscribers of the channel. What's up, Joe? Now, just this one default shows you the scale of this problem. One hotel, guys, $725 million loan. Talking $750 billion, one property. So you can see how this is going to be a huge problem for these small banks that own these loans, okay? This is not going to be pretty when they stop paying these loans. And so far, the defaults haven't been very common, but that's because the loans have not come due yet, but many of them will be coming due over the next, like I said, few years, and 35% of them this year. So it is a problem. And you know why that they're saying that they're doing this? Is because bookings are way down. Downtown San Francisco is a ghost town right now. You have a bunch of office buildings that are empty and people are not patronizing the local businesses there. The event calendar's way down because nobody wants to come to San Francisco anymore. I'm telling you right now, whatever they're doing over there is a huge example of exactly what not to do right now, because they're pushing away all these businesses, guys. Like, they just lost Nordstrom's and they just lost Whole Foods over there. You know, you're talking about people getting stabbed and stores getting robbed pretty much on the daily basis. It is insane. Now you have a big company like the Hilton pulling out of downtown San Francisco. And, you know, the mayor over there is just saying, oh, don't worry about it. You know, these things happen and somebody else will come in and take their place. Like, who's going to come in there and want to do this, guys? If the Hilton can't thrive in one of the most expensive cities in the United States, that's their clientele, then who is going to come in there and thrive right now? That is one downside of coming out here this late. I'm starting to get the mosquitoes. Now, the next thing is the concern over the AI chatbots that people have to deal with their banks. You know, whenever you sign on to your bank and you have the AI chatbot there saying, how can we help you? What can we do for you today? Well, when this first started, it was just designed to, you know, get you in touch with the right person at the bank or help you change your contact information, simple things like that. But these banks have made huge investments into these AI chatbot programs, so much so that regulators are now getting concerned about this, because these things can do all sorts of things like help you get a loan, and more serious banking issues that people are going to be running into with these chatbots. And banks are incentivized to cut back on their human staff right now because banks are hurting big time during this debt crisis and the credit crunch. And so a good solution for them is let's rely more on AI, right? We already saw 4,000 jobs just in the month of May alone for the first time ever being lost to AI, and now banks are next. I mean, do you guys use those bank chatbots? I, for one, don't. I told you guys about this last time we talked about AI. One of the reasons I love using Discover Bank is because I don't have to deal with a chatbot. I don't have to deal with anything, guys. If I need help with something, I have a problem, I call the phone number, and within 30 seconds, you're talking to a real human that lives in the United States that works for Discover. So you can't really beat that in terms of banking customer service. I've never really seen anybody that has better customer service than them when it comes to banks. But it turns out 4 out of 10 consumers that have one of these chatbots with their bank said that they've used it over the past couple of years and that the usage is still climbing. So that's why the banks have been pouring so much money into it. That, and it helps them save a ton of money on paying for people to work at the bank. And really the problem with this is coming down to inaccuracies and the chatbots giving people inaccurate information. And what's happening is people are getting in these doom loops with these chatbots because it can't really resolve the problem that people have, and they just keep running in circles with them, and the robot keeps spitting out the wrong information. They're never actually able to get to talk to a person at the bank. I mean, if this were my bank, I'd be closing the account yesterday, guys. So are you dealing with this? Because if you are, why don't you just switch to a bank that you don't have to deal with this? To me, that's the simple answer. I mean, I vote with my wallet, guys, just like I tell you to do. I don't bank or do business with places that give me a hard time. You know, if they give me a hard time, I cancel. You know, I don't need this. Life's too short to be dealing with stress for a company that you're paying for their services. You know what I mean? Had to go in a couple circles because of all the flooding around here, so forgive me for that. Now, one last thing is this week, Governor DeSantis here in Florida signed Bill HB 133, which is the renter fee bill, okay? And what this does is it's going to allow landlords, in lieu of a security deposit, to charge their tenants a monthly fee. okay? And this is basically like collecting a security deposit over time, but it's not a security deposit, it is a fee that is paid every single month by the tenant. And this law is going into effect ASAP, in fact, by July 1st. And the people that are in favor of this are saying this is great because it allows people that don't have a lot of money for an upfront move-in cost to move into a rental and just get to pay over time. And that's a legitimate argument to say this is good. And people who are against this say this is terrible because there's no limit on how much this fee can be. And also you don't get anything back when you move out. Since you didn't put down a security deposit, when you leave, there's no security deposit to return. And on top of that, if you caused any damages, you're still on the hook for it and there's no security deposit to take. So now the landlord might be suing you to recoup some of that money. I'm getting out of here. The mosquitoes are really starting to ramp up, but it was cool to come out here, meet a fan of the channel, and do the video at a different time. So if you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.